Hello everyone. This is a new weekly market review by ATFX. My name is Gonzalo and I'm here just to share with you the top events happened during the last week. I'm recording this video by the evening of the Friday, 21st, and I'm just collecting all top news that we saw during the week just to keep you completely updated about what was the last most important things happening the previous days on the market. Let's start with one new. It was Reuters was sharing polls to the Federal Reserve economists, Federal Reserve members, just to get a view of what exactly is the picture that these people are getting in mind in terms of what is going to be the monetary policy for the rest of the year. And if you take a look to the article on Reuters, you will find out that most of them thinking that keeping the fact or considering the fact that we still got a strong labor market in US and also consumption levels and savings are still strong, they believe that still there is room to keep increasing interest rates. The market is basically discounting that interest rates going to get in a pause at least. But if you take a look on the polls done by Reuters, you will see that most of the economists and also members of the Federal Reserve, including quotes of those members, are saying that probably the best option they got is still increasing the interest rates at least once, just to be sure that inflation is getting there. Even one of the comments they mentioned on from the Federal Reserve members, it was like considering that the labor market is still strong and consumption is still strong, because we got retail sales numbers this week and it was also good, positive. So considering those numbers, probably we should act, that's what the Federal Reserve said, right? We should keep acting, assuming that inflation rate is gonna at least keep flat or maybe increase again in the coming months. So on that starting point is when they considering that probably the best option they got is still increase the interest rates. Another news that it was impacting on Monday, it was the grain deal of Russia. Remember when we shared this also on forex? I don't know if we mentioned in the previous report, but it was one of the top news that we were considering, that Russian grain deal exit raises black swan threat no one talks about. Basically, forex was suggesting that if this happens, it could be eventually another trigger to increase inflation in the coming months again, because as you have seen in my previous report, most of the inflation was caused by energy and by food. And both of them, I mean, the Ukrainian conflict, it was increasing tensions on the energy market by oil sanctions to Russia, but also the Green Deal between Russia and the rest of the world, especially Europe and US, it was super important because it's one of the main exporters of grain next to Ukraine. But the exportation routes by sea of Ukraine, Odessa port and so on, are controlled by the Russian troops now. So that's why Russia was controlling a very important part of the grain supply worldwide. On Monday, we knew that this deal it was not going further. They didn't renew the deal actually, and the deal was suspended. The words or the reasons that Russia was giving, it was like the SWIFT system. It was not including Rosenbank Agricole Bank back to the SWIFT system as it was requested to European Union. They didn't complain with this request, and therefore Russia was just stepping back from the deal. It's important because this kind of deal is the only one that can actually trigger again the prices on food worldwide, and even United Nations are now making comments on relation of the risk of a new increase on the food prices for the rest of the world. Russia is saying, however, that they will supply Africa even if it's needed for free with grain, but the deal is not open anymore with Europe. And surprisingly, actually, 5 members of European Union are happy with this situation, because 5 members of European Union is the ones who actually request the European Union to not allow grain from Ukraine coming to the European market, because Ukraine is not a member of European Union. You know, European Union is basically a kind of closed market. They only can trade freely between the members of this market, and Ukraine was not a member of the market, but still, for many different interests and reasons, European politicians will let the grain of Ukraine come into the European market and be selling between countries like Italy, Spain, France has been buying this grain. The countries from Central of Europe who are also producing grain were the first one who were complaining about this deal and the ones who make any free business or free trade with Ukrainian grain, which is like Hungary and Poland mainly, the two countries who are in the border next to Ukraine and the ones who are actually producing grain for European Union were not agree with this deal, and that's why European Union was actually the previous months even don't allow the exportation to all countries of Europe the Ukrainian grain products. Super interesting because most of the media are ignoring this fact. Another news that I was commenting, sharing, and posting on our social network was this page shared by Zero Head. It was just part of one of the reports of Goldman Sachs. In this report, there is three different aspects of inflation, very interesting for our current situation, our current days. It's actually dated by 17th of July, so it's really, really fresh. These 3 points, it was, first of all, the Goldman Sachs analysts are mentioned that green energies are actually an inflation factor. It's a factor that can produce or generate more inflation in the future, basically because it's green energy is more expensive than the traditional oil energy, and therefore it's going to generate the inflation effect on the rest of the economy. It's also talking about what they call deglobalization and green transition. So the green transition is the green energies are more expensive, and therefore they're going to cause any kind of inflationary effect on the global economy, but also he's talking about deglobalization or deglobalization based on the sanctions that U.S. is applying to the rest of the countries. Last week we mentioned that even Netherlands apparently was under threat by new trade sanctions by U.S. if they keep selling chips, microchips, and high technology or machines to accumulate or implement superconductors and chips. If they keep doing business with China, they could be under new economic sanctions by U.S. That was said by the government of Netherlands. So this is what they call, what Goldman Sachs are mean by deglobalization risk and inflation. I mean, the effect of the inflation by this deglobalization. Sanctions are actually causing inflation worldwide, basically. And also green transition is a process that's going to generate also inflation in the long term. Very interesting because also by the end of this page on this report is mentioned also that artificial intelligence is actually or could cause exactly the opposite effect. Instead of cause inflation, could cause deflation because artificial intelligence is going to actually give the chance to those workers who are working in many different areas, especially digital services, to increase their productivity and produce a higher level of speed. Like if in the past one company were offering certain services by a team of 8-10 people, now with artificial intelligence, maybe that job can be done by 2 or 3 people. So it's going to increase the productivity. It's going to decrease the cost of labor because you need less people to produce the same things, the same amount of services, and so on. And therefore, it's a deflationary effect on the global economy. But obviously, this is translated also to increase on unemployment rate. Right? Super interesting. This chapter of this part of the report of Goldman Sachs analyst. We also got in terms of how the frictions trade worldwide and trade frictions are rising between Europe and China and especially United States. This article from Euroactiv was mentioned that most of the Central European countries who make or be part of the free trade deals with China are at the moment 5 years later, because this was signed by 2019. They are complaining that yes, the importation of these countries has increased the last few years. However, the exportation of those countries are not increasing, and therefore they considering that they don't see all advantages that being a trade deal with China could bring to you. And I didn't bring into you on this top news, but you also can find if you research it. Italy, the new government of Italy is actually considering to do not renew the free trade deal closed with Chinese government by 2019 by the previous government. It was the first European Union country that joined the BRI deal or the BRI project with China. BRI is the Belt Road Initiative that kind of massive free trade area that China is trying to build between Asia, Europe, Middle East, even North Africa. A massive area of free trade, all of them led by China. And Italy was the first country who was joined this deal in 2019. And also Italy was one of the countries member of NATO with close relations with Central Europe, well, with the head of Europe and also with the United States. By then, in 2019, even the Department of Justice, I believe it was the one who published a kind of tweet on social networks, just mentioned that Italian government should think twice about what kind of deal they were doing with China, because it was really dangerous and compromised the whole relations with Europe, blah, 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 blah. So obviously United States was not happy with this. It's very interesting because I also read this morning an article mentioned how the Council for Foreign Relations for the United States, and if you don't know what it is, the CFR, the Council for Foreign Relations is one of the most important councils in the world because they are deciding about war, about foreign policies from US to the rest of the world, with very important members of the United Kingdom also sitting there. So it's basically the head of the top leaders of the world sitting there deciding what's the interest of the West countries. And Council for Foreign Relations was mentioned that article mentioned basically what was the last positions of the Council for Foreign Relations in relation with it was three aspects. It was like in relation with economic and commercial relations with the rest of the countries between China and US, also diplomatic relations between China and US with the rest of the countries, and also military relations between China and US, the rest of the countries. So basically it was trying to show us that the world is polarized between two sides, China and US. And that report was mentioned that based on the statements of Council for Foreign Relations, in the future, there is no country who could stay or keep neutral. At some point, you are going to have to decide if you are next to China or next to the US. It was giving a lot of examples. Just to give you a few of them, the case of Huawei during the Donald Trump administration, and how many contracts closed with between Huawei and Europe. For example, the 5G networks set by Huawei, they win the proposal to set up all the 5G networks in United Kingdom. It was suspended after Donald Trump and U.S. administration decided that Huawei was a national security threat. It's just one example how this kind of trade or economic and commercial relations can get at some point escalated to a kind of military or national security topic. And super interesting because it's showing to us what's the tensions between the countries. Another very interesting news that is not from this last week, but is also very recent. It was from 16th of July. Is that the commission, the Swiss commission that is investigating the bankruptcy of Credit Suisse, actually has requested to keep the files secret for 50 years. So Credit Suisse in Korea will keep files secret for 50 years. It's amazing. They say that not only those ones who are participating in the investigations, like public services and so on, who are running these investigations, but also witnesses. Any statement done during the investigation has been under secrecy for 50 years. So imagine what is that. It reminds me the case of one of the financial journalists from Bloomberg in 2009, when he was requesting by the court to Federal Reserve publish all details related with the financial rescue they did on the investment bankings in Wall Street. The guy was just trying to get some light on those numbers and request by the court get all those numbers public. And after a few battles on the court, they win and they got all the numbers published. Also, the Dodd-Frank law. It was helping to get all those information in public and reveal what was happening with that money. And so it was a very similar case. I mean, you cannot when something is actually of the concern or interest of the citizens and public opinion. There are many laws that you can actually research just to request to get access to this information. Many financial journalists probably want to take a look at what's going on inside of this investigation to be requested to keep it secret for 50 years. Super interesting, right? And the last one, this one was shocking. This one was actually keeping the the market, especially crypto market, super awake this week, I will say, this last week, because Robert Fitzgerald Kennedy Jr. was proposing that if he become a president, if he finally wins and become the president of the United States, he will make the dollar be backed by not only gold and silver, but also by Bitcoin. So he say, goes to back dollar with Bitcoin, exempt BTC from taxes. If you go deeply into this article, you will find out that, for example, one of the things that is affecting today in US, and many CEOs from crypto companies have mentioned that US is not the right place to make business right now, with considering the law and the rules they set up on the crypto industry. But Robert Fitzgerald Kennedy Jr. He's basically proposing that he's become a president. A dollar will back by Bitcoin plus gold plus silver. He also is saying he's serious about this. He say we will do it step by step. We maybe will take 1% of the treasury bonds issued by the Treasury of United States. Maybe 1%, just 1%, could be sold, backed by gold, backed by silver, and also by Bitcoins. Because don't forget that U.S. government is the biggest holder of Bitcoin in the world. So he's suggesting that because of this, U.S. government could issue bonds that are backed actually with Bitcoin and make a super interesting kind of a fixed income product backed by a world currency, which is the Bitcoin, and so on. But he's also mentioned that at the moment today, some profits generated by trade on these cryptos, especially on Bitcoin. If by the time you sell your Bitcoins into fiat, any profit you have made, any benefits you have made on that sale are actually taxed by 30%. He's just suggesting to remove any kind of taxes from this transition, to convert basically your Bitcoin to fiat and keep absolutely free of taxes this conversion, to just probably facilitate the transition between fiat and cryptocurrencies and so on. Super interesting. Okay. That's all in terms of news. I think this few news I shared with you was the most interesting ones I have been reading over the week. I also was doing on the Spanish channel comments about this news and some others, but I think these ones was the top ones. Let's take a quick look of the market just to see how the market is closing today, Friday, 21st. So you will get a clear view of what to expect Monday by the beginning of the week. We can see that SP 500 is getting some troubles to quote about 4,600 points, something I mentioned in the Spanish social networks in advance. I say that be careful. Once 4,500 points are breaking up, the next stop going to be 4,600 basically, because it's as you will see here, it's a top resistant in long term. The most recent one from April 2002, I believe. Let me take a look. Here we go. Yeah, as you can see, we got again there and there double shoulders on this shoulder head shoulder figure. It was exactly in the area of 4,600 points when these both shoulders get done, and also the neckline, or let's say the supports of this head, it was generating in the area of 4,600 points. That's why I believed 4,600 points could be a point where the market could twist. And actually, again, I mentioned this, I shared on the social network before the movement was done. And as you can see, for the last 3 days, this is exactly what is happening. SP 500 is twisting, getting close to the area of 4,600 points. You see? Let's see how it's going. But yeah, market is not precisely super strong right now. Keep in mind the last 2-3 weeks has been complicated for them. I mean, the market has been in trouble for the last 2 weeks, and we can see that actually we are not in a super positive or bull trend, okay? Especially in Europe. We will see now the charts in Europe. This is NASDAQ 100. And as you can see also, NASDAQ is not a market that you probably would like to buy right now. Over the next week, over the week starting now, if you see that the NASDAQ is in this area, could be interesting. Please keep in mind, this is not advice of any kind. I'm just sharing with you my view on the market. Let's take a look on European market. Let's take a look on DAX 40. And again, DAX 40, if you take a look here, you will see that is full of resistance in this area. Even if it's quoting let's say above the 16,200 points, even if he's quoting above those levels, it's going to get troubles to break up 16,300, 16,400, these levels, right? But if you take a look also in the long term, you will see that, as I mentioned the previous week on the previous report, guys, we are facing the end of bull trend, which is this one. If you can see, it was super strong by the beginning of the year. It was getting weaker in a few months, and right now we are completely lateral movement, which is breaking the bullish trend. So this is the situation with European market right now, and that's why I'm expecting a correction that probably is going to take to the area of the 15,600 points, this area. But the main risk is break out these levels and start to make a correction based on the Fibos. And if you take a look, the Fibos, 61.8, for example, it can take you to the area of 14,500, 14,600. These are the next level is just Fibonacci retracement. So you will see basically all of those levels could become a target if the main supports are lost. Let's take a look also on dollar, because the movement on dollar has been super interesting. It's trying to recover the main levels. For many of you, probably what you see here is a pullback on shoulder head shoulder, a massive shoulder head shoulder like a cathedral here, super big shoulder head shoulder, and this is a pullback just coming back to the area of 102, 103 points. So once it's in that area, we have to be very cautious, we have to be very careful, because the dollar could again take another and a definitely bear trend again, getting weak and drop below 100 points like it did already. So just pay attention of the movement of the dollar, because this is probably just a pullback, okay, considering this massive drop on the index. Considering that, or keeping that in mind, if you go to euro dollar, you will see that it's actually dropping, but it was doing really well, because the target was in 115, almost 114.50, this area. That was the target, but now it's twisting because the dollar is getting stronger. And again, if the dollar is doing just a pullback, it means that euro dollar are going to rise up again. So keep attention, get the shot, the gun ready for shot on certain areas, because it's going to be super interesting. It's going to be super interesting to take positions in that levels. Let's take a look also to the gold first, because gold is getting adjusted by the dollar too. It's getting weaker and weaker because the dollar is just basically rising back, right? But again, if it's a pullback, there is nothing to do here. If we go to a 4 hours candle, you will see what I mean. This is the movement. As you can see, it's just turning back, but it's still all the resistance dollar gold has on the 1960, 1965. Now it's getting a support. You see the first candle by the end of, again, I'm recording this by 21st, Friday 21st, just to give you a whole picture of the week, and then you can start the week properly. And as you can see, all these levels are kind of support right now. Again, if the dollar is getting stronger in that kind of pullback, which is given to us a temporary feeling of strength on the dollar, if that is happening, you will see that the gold is getting colder and softer and lateral here. But if the dollar is dropping again, for sure gold could rise strongly against to maybe even go to $2,000 again. So we have to pay attention to the movement of dollar, because it's going to terminate gold and also euro dollar movements. Let's go just by the end, finish with Bitcoin, which is keeping this lateral movement. Remember, we mentioned in the news that this idea, crazy idea of Robert Kennedy Jr. suggesting that if he's becoming the president of the United States, he will make the Bitcoin or the dollar be backed by Bitcoin. So this is one massive step also for the industry. It's just nothing. The chances of Robert Kennedy become president is probably super low, but still keep in mind the second candidate in intention of vote based on the Fox News poll. He will be the second candidate with more chances to win after Joe Biden, and Joe Biden right now is sleeping, so probably it's actually, realistically speaking, could be a good candidate for the Democratic Party, right? And this is a movement we could expect. It's a clear support on $29,800, and probably if we are managed to deal with this 200 moving average and make certain support here, maybe we can see that the Bitcoin is rising again to $31,000 per Bitcoin. We're gonna keep an eye on the Bitcoin quote because it's getting also super interesting. Okay, I think that's all. And I just bring to you with all my love the top news I found this week that it was really interesting. If you like this, please let me just remind you, subscribe and keep in touch and leave your comments on the video so I can even include more analysts, make certain videos based on your preference if you want to see certain market or not. And please go to the video we did on Tesla and review the report because it was exactly going in the line with what the market did after Wednesday, after Tesla published the quadrimestrial earnings. Okay. Thank you guys. Thank you for watching and see you next week. Take care. Bye bye.